Sonlin and Herwig Konings are founding partners of Security Token Group. All opinions expressed by them or guests on this podcast are solely their opinions and do not represent the views of Security Token Group or its subsidiaries. You should not take any opinion expressed on the show as a specific inducement to make a particular investment or follow any investment strategy. This podcast is for informational purposes only.
Hello and welcome to the Security Token Show. I'm your host, Herwig Konings, and of course, I'm joined by my co-host, Kyle Sonlin. And we've got a great show lined up for you today. We're going to be talking about the gamification of finance. But first, the latest industry updates, the latest security token offerings, and the latest security token market update, followed by a nice Metaverse news update.
Episode 124 here in sunny Miami, Florida. What more could you ask for on a great Monday morning?
Not much.
But I want to say first, shout out to our sponsor of the episode, Trucpal. They're doing a security token offering overseas, and it's an amazing offering. You're going to learn more in Megan's STO section later in the episode.
And jumping right into the show, we've got the top 5 things that you need to know right now happening in the industry. Starting off with number 1, FTX. Huge news, right, Kyle? A $2 billion venture fund has been announced.
You know FTX, if you're here in Miami, they sponsor the Miami Heat Arena. It's the FTX Arena. They've been very active all across the public sphere, and now they're back at it again. A $2 billion startup fund. We're talking $100,000 check up to millions of dollars. They successfully poached Amy Wu, who's formerly from Lightspeed Venture Partners, to spearhead the fund, and they're going to be deploying across crypto gaming, investments, security, insurance protocols, and maybe, just maybe, they're going to work in some security token investments or maybe some Miami local investments as well.
I think they'll be smart enough to do that. Moving on to number 2, we've got Fusang. Huge announcement that they're going to be IPOing on Fusang, of course. Now, this is a digital securities exchange out of Malaysia, and now they're eating their own dog food, which, of course, we preach that and we love that. In fact, we're doing it ourselves with our very own tokenized crowd fund of our media company, Security Token Market. This is the company behind our show here. So if you are interested in that, you can go check that out, link in the bio. But they're also doing the same thing. In this case, they're going full on public on their very own platform. And this is essentially, again, tokenized shares that are now publicly traded, available on Fusang. That's very exciting news. I'm sure we'll have more news about the actual IPO details soon to follow.
$10 million fundraise, 2.5 million tokens, so about $4 a token, and amazing things coming from Fusang. Moving into number 3, we've got Arca. You may know Arca as a leading crypto investment firm. They do some hedge fund stuff as well, and they're also in data services, and they conducted a very interesting poll with over 100 capital markets professionals, polling them on whether blockchain and tokenization will impact the traditional stock market industry.
What are the results, Kyle?
Spoiler alert, 77% were confident that in the next 5 to 10 years, almost all or all stocks are going to be tokenized and leverage a blockchain for their settlement, specifically citing that instant real-time settlement as the key benefit in this opportunity and in the technology. No surprise to us, only great to see social proof on that one.
Fantastic news, and thank you, Arca, for performing this study in the first place. That's huge industry findings, and we find them very helpful. Moving on, we've got Soma Finance announcing a $6.5 million round backed by the Mantra DAO and by Tritorian Capital, which is a registered SEC broker-dealer focused on securities and NFTs and many other things. And they're working together to launch Soma Finance, which is a DEX, a decentralized exchange for security tokens, NFTs, and other cryptos here in the United States. That's a big deal because you've got a regulated broker-dealer, Tritorian, working with a DAO, developing a decentralized exchange focused for regulated products as well as NFTs and things. So that's huge news, very exciting. Can't wait to see that launch.
Finally, number 5, we have Neufund, based out of Germany. They're a fundraising platform and doing some blockchain-based issuance as well. And CEO Zoe Adamowicz has gone on another campaign talking about how the company's shutting down because of regulation. And I've got to be honest, Herwig, we may have our own opinions here. The same company with the same founder came out a couple of years ago talking about how the regulations didn't fit their business model and it wasn't working for them and they were shutting down. I was surprised to see this headline again because I feel like we've already been through this rodeo before, but unfortunately, best of luck to them. However, I would just recommend you just follow the current rules and try to implement it that way.
Yeah, I remember, I think the original article said they were pivoting to crowdfunding and other sort of models without tokenization, and now once again it seems like they are officially closing shop for good, citing regulation. So unfortunate to see. Hopefully the regulators do see this as a wake-up call, but at the same time, hopefully this doesn't stop others from pioneering, because this industry is inevitable, and good luck to those who you are.
Best of luck, Zoe and Neufund. I hope your next venture goes even more successful.
And now let's move on to John Pittman and get the rest of the industry news.
Welcome back to my side of the blockchain. I'm John Pittman, here with some of your weekly industry highlights. Starting across the world in Singapore, we have Siam Commercial Bank invested into SBI Digital Markets via their venture arm SCB10X. So SBI Digital Markets' goal is to target institutions and assist them in issuing bonds, stocks, and alternative assets such as security tokens all across Southeast Asia. Of course, subject to regulatory approval. Now, this isn't the first time SCB and SBI have collaborated. Back in 2017, the two organizations worked together using RippleNet for cross-border payments. Speaking of collaborations, I have another collab here to talk about. Enigma Securities has officially announced they are acquiring Velocity Platform, a US-based cryptocurrency broker-dealer. So Enigma is known for being a regulated company providing crypto liquidity, banking relations, and custody solutions. The acquisition of Velocity Platforms, along with its registration across 22 states, will be vital in Enigma's plan to offer its digital asset service to all 50 states, including New York. Next up, we have a relatively new platform making huge moves here soon, Realbox. So Realbox is a tech-driven real estate platform, and they're planning to launch in the first quarter of 2022. The full tokenization process looks like this. The platform will facilitate the conversion of real estate into non-fungible tokens, or NFTs, and from there, we'll tokenize those into security tokens backed by the physical assets. The vision for Realbox is to capture real estate capital growth, rental income, and secure the same for other valuable assets that can be tokenized. With the eyes set on worldwide expansion, Realbox partners already include some of the largest property developers, real estate agencies, and financial institutions across Southeast Asia, Australia, Dubai, Europe, and the USA. What's also interesting in the diversification that Realbox provides is that they will also have available for investors a real estate metaverse where Realbox will be facilitating the creation, buying, and selling of virtual property. Also in this project will be a governance token that also functions as a utility token. The token will be used to pay for service fees in the ecosystem, including listing, subscription, transaction borrowing fees, and paying dividends. I think this will be an interesting project because it looks like they plan to use everything out of the Web3 playbook. And if you don't know yet, know now that here at the office, we're churning out content in our quest to tokenize the world. Our very own Peter Gaffney, the head of research for our advisory arm, released an amazing article discussing a hypothetical tokenization using mortgage-backed securities as the subject. Some of the benefits of tokenization included better transparency of the underlying assets within separate mortgage-backed securities. He's also of the mindset that the ratings for these securities or assets can be verified on-chain through entities like Morningstar, Clear Rating, or Crypto Asset Rating. Having efficient and digital markets for brokers to more effectively connect buyers and sellers will only help improve price discovery. Peter goes on to say that the mortgage-backed securities industry is actually one of his favorite use cases for tokenization, given the sheer size of the industry and previous addressable problems such as the housing crisis of 2008. This article is number 47 in a long line of hypothetical tokenization articles that Peter publishes weekly, and he plans to cover every industry imaginable. If you have one that you want him to cover, hit him up on Twitter. His handle @PGAFF_digital. Before I leave, let's talk about one of the largest crypto exchanges to get hacked recently. So Sunday of last week, Crypto.com sent out a tweet stating that users will report suspicious activity on their accounts, going on to say that they will be pausing withdrawals as the team finishes investigating. But they assured us that all user funds were safe. Guess not, because on Wednesday, Crypto.com CEO confirmed that 400 accounts were in fact hacked after several layers of the firm's security were compromised. Apparently, $15 million worth of Ether were robbed and then washed with Tornado Cash. It's a platform allowing users to conduct anonymous transactions. But no worries, Crypto.com fully reimbursed their users. To another point though, this is why we're bullish on security tokens here at Security Token Market. To put it simply, since we know which tokens belong to who, all we have to do is burn the token and reissue another if a token holder is robbed or loses their keys. Smooth, just like Megan. Up next with your weekly security token offered updates. And that's it for me. I'll catch you guys next week on the other side of the blockchain.
Hi guys, welcome back to STO Updates. Before we jump into this week's recap, I'm super excited to announce that my new show, Spillin' the NFT, is debuting tomorrow with Jessica Burns, Kayla, and Delaney, all women on our team. We developed this show to help teach women or anyone about the world of crypto, NFTs, blockchain, tokens, and more. It's an awesome show releasing every other week, and it's filmed right here in Miami on our Meta yacht. Subscribe to Security Token Market on YouTube to watch when it drops. Okay, now on to this week's updates. Biologics Corp has updated shareholders with further details about its submitted FINRA applications for their name change and NFT dividend distribution. This is the first time that any public company has attempted to distribute an NFT as a dividend. Biologics is a Wyoming-based biotech company developing a range of nanomedicines. The company is still awaiting approval from FINRA for the NFT dividend distribution. Upon approval, the company will distribute this dividend. The company is also still working through the name change process with FINRA. As first announced in August of 2020, the company moved from the Cayman Islands to Wyoming in April 2019. After almost a year and a half of numerous FINRA submissions, the name change is still pending. The company plans to tokenize this business and list it on the exchange INX. The company is still in the process of announcing the specifics of this transition. Next, we have Trucpal. They're one of our security token market clients. They're an underlying platform that introduces security tokens into the platform economy to serve the Chinese freight industry. The Trucpal team has 9 years of experience in R&D and operations in the freight industry, as well as many years of blockchain experience. The Trucpal token is backed by a Chinese operating company and issued in compliance with US securities law. Check out their Twitter at Trucpal and also join their community on Telegram for the latest updates on their STO. Last, I'm excited to announce that Fusang has won their regulatory approval for a landmark IPO of equity tokens, which directly represent shares in the Fusang Corporation. They're Asia's first fully licensed and regulated digital financial ecosystem for security tokens and assets. FSC equity tokens give investors direct shareholding in this regulated stock exchange for security tokens. FSC equity tokens are slated to list on the Fusang exchange by the end of Q1 of 2022. That is all for this week. But don't forget, you can reach out to me by emailing tips@stomarket.com to share any news, information, or recommendations. I'll see you next week.
Hello and happy Monday. Welcome to the market update where we dig into all things, well, blockchain markets. Boy, oh boy, do I have quite the announcement for you, but we'll get into that shortly. Blockstream Mining, a company that offers international investors exposure to Bitcoin mining through a security token that's issued on the Liquid network, has officially gone live. That's right, after raising over $38 million through 7 tranches, Blockstream is flush with cash and ready to provide investors of all sizes direct exposure to benefits of owning Bitcoin miners. With the most recent tranche pricing each security token at a cool $320,000, each token is going to represent 2,000 terahash produced by Bitcoin miners that are hosted at their facilities. The upfront investment provides hash rate at a flat rate over 36-month term. Over these 36 months, the mined Bitcoin is held in a special purpose vehicle or SPV and delivered to the respective BMN token holders at maturity. Why mine instead of buy, you might ask? Since 2014, the mine and hold strategy has proven to be more profitable than buying and holding. This security token offers investors a very unique opportunity to get direct exposure to an investment vehicle that was previously very illiquid. The Blockstream token is now live on STOmarket.com. And speaking of STOmarket.com, have you checked it out in the past 72 hours? If so, you'd notice that the market cap has exceeded $3.5 billion. If you remember, just 2 weeks ago, I was talking about how we lost the $1 billion figure. Overstock was no longer the leader, and INX took over the top spot. Well, not anymore. You might be asking yourself, what happened? Dignity Corp happened. That's right. The blockchain development company that relies on security tokens to unlock new ways of investing in the United States precious metals, mining, and mineral sector has officially gone live on CryptoSX. The DGAO token has catapulted the security token market to a brand new all-time high. This just goes to show how early we really all are in the security token movement. Not many markets 3x by the addition of just one company going live. It's not going to take too many more prominent players in the field to make a big dent in the traditional trading markets. That's all for now, but I hope you have a fantastic week, and I will see you next Monday.
Wakey wakey, welcome to Inside the Metaverse with your host, Yves Van Col. I just want to start off this week by saying wow, because that's all I can say. Because first, we have Walmart literally saying they're jumping into the Metaverse with literal plans to create its own cryptocurrency and NFT collection. Then we have Microsoft agreeing to buy the video game maker Activision Blizzard for almost $70 billion in its largest takeover ever. And the best part isn't but the articles that are coming out. And the news anchors, they sound like this. Might be Microsoft's play to get in on the Metaverse. Do you think the Metaverse is activating all these big tech companies in ways we've never seen before? But will they face antitrust issues in the coming future? Only God knows, but stay tuned. Next up, Apple's VR headset is delayed to 2023 because of developmental challenges. It sounds to me like the competition is heating up a little bit faster than Apple thought. And the developmental challenges, just Apple's way of saying, oh my God, we aren't in first place anymore. What do we do? Saving the best for last, Meta is developing ways to create and display NFTs on Facebook and Instagram. The company's Novi wallet technology would power all of this, and Instagram is reportedly testing a way to showcase NFTs, while Meta is also said to be discussing a marketplace that will help you buy or sell these NFT digital collectibles. That was Inside the Metaverse with your host, Yves Van Col.
Thank you, Yves, for that awesome update. That's some big things happening in the metaverse there. And now let's move on. I think a lot of application, in fact, to our main topic, the gamification of finance. But, of course, before we do, Kyle, we have to talk about our companies of the week. Ooh. This is when we each choose a company that we thought in the space made the biggest moves last week. Kyle, who do you got?
My company of the week this week is a trading security token. It is a fund that tokenized their LP interest. It is Spice VC.
Okay.
Spice VC is the highest performing security token, 137% returns year to date. Their NAV is up to $3. They're one of the earliest tokenized offerings to date. In fact, they've been around since 2019, 2018 in terms of even launching a live token. They've been in this space for quite a while, and their fund, which is filled with a lot of good equity investments as well as some crypto stuff, has performed incredibly well. So I wanted to give a shout out to Spice VC. Now, we haven't seen a ton of liquidity necessarily on these trading assets, but I would argue it's because investors just love holding the assets. So shout out to Spice VC for amazing performance over a long period of time and building strong track record in the industry.
It's a great choice, Kyle. Spice VC, one of the first security token offerings in history and one of the best ways to get exposure to securitize the tokenization platform. So very, very good choice.
Absolutely.
And very apt.
How about you?
Milo Finance. They have announced the first ever crypto mortgage. This is huge. Wow. They actually announced it at NABTC. That's the North American Bitcoin Conference that was happening here in Miami last week. And it was awesome. And I got a chance to catch up with the CEO, Joseph. And in fact, I was blown away that now his company is making it possible. I always thought this was low-hanging fruit for simply people to pledge their Bitcoin and gain collateral to purchase real estate. Now, this is a lot more intricate and complicated than you think, but the easy point of it is people don't want to sell their Bitcoin. But if they have a lot of it and they can go ahead and get a fiat-based loan backed by that Bitcoin collateral to go ahead and purchase US real estate, which is in itself an asset, well, that's just pretty darn awesome. And now that's another great way to get crypto into the real world. And so for that reason, my company of the week is Milo.
I think that's a great choice. Shout out to them for announcing at Miami. The North American Bitcoin Conference was a wild success. Shout out to the team there. We actually had a ticket giveaway going through our social medias, right, and hopefully we'll do that again for future conferences. Make sure to follow us at STO Market anywhere you know us. Twitter is our biggest one. We just hit 10,000 followers.
Huge number, and we're not stopping there. Now, let's get into the main topic for episode 124. We're talking about the gamification of finance, something that has recently been more and more on the radar for the SEC, but as well for all of us retail investors and consumers. It's making it easier to access, invest into, financial products like Robinhood and other, these new trading apps that are coming about. How do you think about all this, Kyle?
Yeah, it's really an interesting thought because in the throughout history, investments in the stock market and all these types of things tended to be something that was very serious and was not accessible to retail. And you had your broker, you had somebody, an investment advisor that was doing things on your behalf. And now more than ever, it's accessible to individuals. As you said, you can download Robinhood on your phone, commission-free trading. They even give you a free stock just by signing up. Cool. This has never happened before. And while it's done a lot of great things in pioneering and bringing down the barriers of friction towards investing in these products, we're starting to see how the retail has more power than I think anyone maybe recognized or realized that these individuals, these communities have over the market. So when we're looking at Robinhood, you're looking at high frequency trading from retail, which has caused Gary Gensler specifically to come forward, the chairman of the SEC, to say, I'm not so sure how I feel about high frequency trading from retail. And that's interesting. I think we both have opinions on that because high frequency trading isn't necessarily something that doesn't occur in the in the markets already.
It's not just exclusive to retail investors, but there is also a reason why the SEC has to pay attention to this, because NFT may have been the word of the year, but there might have been another close runner-up, which is stocks, baby. I think we all remember the GameStop saga, as well as AMC and many other of these stocks, not tokens, that got red hot with things like Wall Street Bets, with other retail communities that were really riding on what was literally meme culture, as well as some fundamentals behind them.
Right. Yeah. You look at social media has been a huge influence on the stock market over the last couple of years, especially with the COVID pandemic. Everybody's inside, no one's communicating in person. It's all online. You're looking at Tesla CEO Elon Musk tweeting out that he's going to take the company public, or that the stock's underpriced or overpriced, I think even at one point he said, and driving the changes in the market and kind of blurring that line between free speech and maybe some borderline market manipulation. You've got, as you mentioned, Reddit has these Wall Street Bets communities and other kind of very risk tolerant, almost gambling communities that are pumping different stocks based off of the fundamentals and the opportunities to take advantage of short sellers and things like this. So you're seeing a ton of influence coming from the retail markets, but it does also point a light on the financial market being over leveraged in a lot of ways. And so some of these communities might argue that, hey, it's not our fault that hedge funds or other firms have put themselves into precarious positions because they felt that they were almost invincible from the retail crowd.
Oh, that's absolutely true. And of course, as a result, now, again, the SEC is paying attention. So the gamification of finance is a big trend. And of course, we are kind of talking about the potential negatives here, right, and why this is coming about. But there is, two sides to every story, and the gamification of finance proven by Robinhood and of all these trends, it is inevitable. It is the ease. There is good that comes from enabling people to actually participate in investing and potentially, gaining wealth. It's a very powerful way to do it, and gamified is actually the most fun way to do it, hence the word game. And that's why you see these new trends like play to earn, where you can potentially actually play a video game and earn real rewards that you can then turn into monetary value you can use, right? That's a big thing, as well as the fact that just in general, investing can be scary. So the idea that, okay, it makes it a little bit more friendly, a little bit more seamless, a little bit more what we're used to doing, to be able to participate in the stock market, well, like you said, Kyle, I think that's kind of a good thing, that it's not just, the ones in the suits on Wall Street that are making all the decisions. Now the crowd can also make a decision.
And it's important for companies to recognize that they no longer are just catering to investment firms, right? As a large public company now has to recognize that many of its stockholders are now making up its retail customers, and it needs to cater to them as well as catering to those large investors. And I think that the token boy, John Pittman, you saw him earlier, gave a great analogy in the office yesterday, kind of comparing it to fantasy football. And before fantasy football took over the sports world here in the States, not everybody knew a lot about football or about the players in the game and how it goes. And then all of a sudden you bring in this component of the stats and competing against one another, and potentially even a little bit of gambling in there for some people that get into that with those different apps. You now have all these individuals that are experts on the stats or experts on the different players and what's going on. And in the same way, we're kind of seeing that same trend happening with investments. Now with crypto, where anybody can access these opportunities, anybody can trade 24/7, it does start to really feel like this opportunity where it's being catered towards the average investor, which is fascinating. Never before have you been able to take control of your own finances in this way. And I think that it's increasing the amount of people that are able to get involved and invested in these spaces, which hopefully creates more financial opportunity for everyone.
Yeah, it's exciting. It's absolutely, for sure, like you said, a little competitive. But also, I also think you said the word gambling, right? That's an interesting word because some people, they look at investing and they say, there might not be too much of a stretch between the two. But at the end of the day, there is a police, there is the SEC, there are regulations. So we have to work within this. And now, for the first time ever, this concept of gamification being brought into investing is a new one, for sure, and therefore the SEC has to figure out how they're going to try to address it. Gary Gensler, who is the chairman, gave us a little bit of a hint on a press conference last week on Wednesday. He said specifically that trading often, according to statistics, is bad. Probably because maybe you're more likely to make a bad decision on the run as opposed to long-term investing, which is of course cited as good, right? The fact that they have the ability to access new investment opportunities and of course gain wealth as a result.
So what do you think? Should the SEC step in here and add some additional clamps on platforms like Robinhood or others that are encouraging more of this high-frequency trading, more of this more emotional, frequent activity? Or should they take a step back and let it continue to play out? We want to hear all of your thoughts and feedback. You can leave that in the description of this episode wherever you're listening. You can tweet us on social media. You can link us in the DMs. Send us all your thoughts and opinions. We want to hear it, and we want to feature you in all of our conversations around the office.
Absolutely. We've got a very active Discord community as well. Hop in. We got token trivia every week. If you watch this show, you got a good chance of winning. So check that out. And we got big news if you haven't watched last week's episode. Spilling the NFT is now live. You can go check that out. It's great for anyone who's new to crypto. But also, again, we're looking for feedback there. And check out and give your feedback to Jessica and Megan.
Like and subscribe. Stay up to date with everything. Check out the What's Drippin' newsletter. We got all the content. And you can tune in next week for next week's episode.
Happy tokenizing.